Nothing said on the Touchgrass podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions only, not financial advice or necessarily the views of the Touchgrass podcast. Our hosts, guests, and the Touchgrass podcast team may hold positions in the companies, funds, or projects discussed. Enjoy the show.
GMGM, welcome to another Touchgrass podcast episode. Today I have a very special one. As a lot of you must know, I'm a geek for trading infrastructure and I understand a lot of this stuff. And I want you guys to understand this stuff as well. Today we have Katia from the Bebop team. Katia, welcome on the show.
Thank you.
Awesome. Just for everyone's context, Bebop announced BopAMM a few weeks ago. We've been trying to get Katia on to talk about this stuff in more detail. Katia, I think a way to sort of start off the episode, maybe as a foundational level, can you sort of talk about your background and sort of Bebop's origin story and how you got into like building complex trading infra?
Yeah, so my background has been in TradFi, or something that I just call finance, so which I think we're kind of merging into crypto and everything into finance. But yeah, so spent there quite a few years, any asset class, all sorts of like data analytics, a bit of trading kind of stuff as well, but all on the infra side, right? So kind of my most recent TradFi job was at the London Stock Exchange Group. And then I found myself in crypto. In 2021, I joined Wintermute, which was I think like a 30 people company at the time, but obviously it was 2021 and it was just like everything was exploding. It was a fantastic experience to be there, but everything growing so much, and every person being able to make such a difference for in the company, in the markets, like everywhere. Yeah, and then with Bebop, it was one of the things that Wintermute at the time, and I think now as well, wants to do, is to invest in DeFi, both through ventures but also through projects incubation. And it was kind of that was one of the ideas which I was helping out with while having a full-time job as a head of product at Wintermute. And then I kind of fell in love with DeFi, and and I wanted to run full-time with that. And so with that, I left my Wintermute job at the beginning of 2023 and started running Bebop full-time.
Awesome. What do you have any insight on like what is it about some of these bigger market making shops or people who build traditional infra? Like why are they more focused on on-chain infra right now? Like do you think that's where the opportunity is, which is why we're seeing such high demand from like everyone trying to build this type of infra?
Well, so for like Wintermute per se are building their own, trading infra, right? So it's like their own trading stack and all of that. So as investors, of course, people understand this market, right? They have insight and they kind of perhaps make better investment decisions. So that's that. But in terms of but that's more like an investment thing, right? Rather than like building your own, because building your own, I think sometimes would also be limiting, because as a market maker, you want to trade on every venue that matters, whether you have some sort of relationship with it or not, right? Like everyone wants to trade on Hyperliquid, even though like there is no like investment or otherwise kind of partnership agreement with anyone, as far as I know, right? So I think it's just, but like on the side of like why do trading firms increasingly come to DeFi? I think two reasons for that. I think one of them is that the market has slowed, right, in many ways, and so people are looking for new opportunities. So we see a lot of market makers actually coming on chain and like looking to do more on chain. That's for sure. But also it's because crypto is maturing, and with RWAs and all that kind of stuff, right? I think there's like a lot, like the DeFi part is a lot more understandable, kind of how it works for market makers, right? So they understand RFQ, they understand like other things like this, right? And so from that respect, it's just kind of easier for them to they can on board with the tech, but not necessarily with this kind of alien ethos that was essentially like an essential part of DeFi, back in the day.
Yeah. And then sort of with Bebop, Katya, like what was the initial problem statement that you guys were tackling? Like how has that expanded over the time? And we'll come to like how you collaborate with different market makers in a minute. But sort of can you explain your product stack first a little bit?
Yeah, so from my perspective, since I mentioned I come from the kind of off-chain TradFi sort of background, my fascination with DeFi really was kind of twofold. One thing, like, it created so much innovation, and it has all this global access and composability and all those cool things. But on the other hand, there were definitely things that I feel like were created that either didn't necessarily make sense or were reinventing the wheel for perhaps like not the best reasons. And so it was pretty clear to me that things like PMMs, they're fantastic innovation, and they again are fantastic for I don't know, meme coins, or like generally kind of like sort of bootstrapping the markets and assets and pricing for that and all of this, right? But like longer term, it's really an efficient way of trading, right? And it was pretty clear that there's a level of specialized specialization, basically, like in any market, and a market maker would price an asset more accurately and just generally better than a dumb curve, basically, right? And so it was always clear to me that as the market matures, those sort of kind of the intersection, or maybe the best of both worlds, but in DeFi and TradFi would grow, right? And this is where I really had very strong belief in RFQ type trading, or just generally kind of professional liquidity type trading and execution on chain.
Would you say that has also evolved because of how infra on chain has gotten better? Like, would this stuff be possible 2, 3 years ago or last cycle, for instance?
Yeah, RFQ was still a thing a few years ago, like for Bebop specifically, but also for others. Like, it's definitely growing now even more, because for a certain type of assets, like RWBs, for example, it just, no one goes and says, hey, I want to set up a liquidity pool for X stocks, or those kind of things, right? Or for like tokenized no, tokenized gold does have pools, right? But like, I think basically more and more so, like we're gonna see no pools and basically RFQ pretty much all the way, or other types of market maker liquidity driven things like PropMMs.
Yeah, I think it also has to do with like, to your point with RWAs coming on chain. If an asset is a higher market cap than Bitcoin, and like the sort of liquidity, like having that much liquidity in the AMM pool is probably inefficient, like, and probably sourcing that liquidity is inefficient as well. Katya, can you talk a little bit about how the RFQ flow works? Like, do you work with multiple market makers? Are there like individual quants that also contribute to this? How does the PMM RFQ flow work, like end to end?
Yeah, so we work with a bunch of market makers, and also actually asset issuers who quote their own assets as well. By asset issuers, I mean RWAs or stablecoin issuers, rather than projects market making their own token. That's definitely not what's happening. But yeah, basically, we have a bunch of market makers, and they continuously send us their pricing for a bunch of different assets, right? So I think like overall we have about 300 to 500 assets, maybe more, and that's a mix of RWAs and crypto. Increasing number of RWAs, and I think we're going to see more and more and more of them, and ultimately. I think we're probably at kind of 50-50 right now, but I think it's going to be it's going to grow on the RWA side. So we receive this pricing continuously, and then we receive quote requests from anywhere in DeFi. So it could be anyone from solvers or aggregators, kind of B2B type flow. It could be B2C type flow from wallets, for example, or on-chain portfolio management apps and things like that. As we receive the quote, we look at all the pricing we get and say, hey, okay, what is the best path to execute this quote. If it's like a 5 mil trade, most likely you want to execute it against multiple market makers because that will give you better pricing. And we do that. And so we
Can you
ultimately
why that is by
combine. Oh,
traditionally? Well, yeah, why do you need like multiple people quoting for better price discovery?
yeah, because the wider, sorry, the larger the size, the wider the spread. So what market makers do, you pay the spread to them because they hold the risk, right? So you're saying, hey, they hold the price risk. They're saying, hey, you want to execute like a 10 mil swap right now. This is the price to mid that you're gonna pay for it as spread. But obviously, as they enter this transaction, they need to get out of this, right? And so to hedge it, and the bigger the size or the less liquid the asset, the more expensive it is for them, right? So the makers need to quote such that they're able to hedge it as quickly as possible, right? And ultimately, if the price goes badly against them, they're obviously going to lose money on this trade. So that's what they literally sell or they buy market risk from you basically as you trade. So if a maker needs to hedge 10 mil, it's much more expensive for them than hedging 1K, right? And so, but they do it individually. And so, for example, if there's like 10 mil trades and we say, hey, okay, like this mix of 7 market makers will give you the best price, and like maybe 3 mil is going to go to one maker and like 1 mil is going to go to another, and then like the rest is going to be a spread between the rest of them. Then ultimately for the user, they pay the spread for smaller chunks. However, the makers are still able to hedge and make their P&L as part of this trade.
That makes sense. And then would you say on-chain trading has become more efficient and more, I don't want to say competitive, but like from a market maker point of view, has quoting on-chain become more competitive in recent times with as more market makers come on recently?
Yes, it's definitely competitive. I think the best way to, or the best kind of thing to compare on-chain market maker trading is to compare it to OTC rather than centralized exchanges, because centralized exchanges have different fee tiers and whatnot. Whereas if you come to a maker directly to trade OTC, that's kind of exactly the exact price you get that they quote you. And on-chain RFQ or on-chain OTC is still not as good in terms of pricing, I think, as off-chain OTC, although it depends on many different things. And that's primarily because DeFi, is kind of a bit of a wild west, I guess intentionally. Anyone can transact with anyone, which is great. Up until the point in time when you get toxic arbors who will come and request a quote, sit on that quote for 30 seconds, wait for the market to go in their favor, and then execute on the quote, right? So that's the biggest kind of RFQ problem that's out there. It can exist anywhere, but in DeFi it's especially bad because it's quite difficult to switch off that flow basically.
Yeah, and would you say that's because the market's so nascent in DeFi? Like, do you see toxic arb flow in TradFi or traditional finance per se?
It can happen, it can occur, but in TradFi you have relationships, right? You say, hey, this is the API key, and kind of that's it, right? And then if you see that that API key is being abused somehow, you say, well, goodbye, I don't want to trade with you. Whereas we also have API keys, by the way. We have open API, but we have API keys on Bebop too. But let's say give it to a router, like an aggregator. Then the aggregator can be potentially interacted with by anyone. And so basically there are ways to get to RFQ. And again, right, we do a lot to sort of protect the makers from that. But yeah, it's an existing problem for sure.
That makes sense. So the main problem that Bebop sort of takes away for an asset issuer, let's talk about the asset issuer, is instead of interacting with say 7 market makers, figuring out individual deals and individual sort of quotes for each, like you can just contact Bebop and you and your team can take care of that entire flow and the quoting process.
some ways, yes. So when we work with the asset issuers, there are two things that we can do. Like one, we can introduce them to makers and just like flag an opportunity to all our makers. It's over a dozen of them, dozen, not 1,000. Sorry, let me say like 15 plus, 15 plus. And yeah, and we basically kind of say, hey, like, this opportunity, would you like to speak to the issuer? And then that's kind of one way. Another way is that an issuer can actually quote their own assets through Bebop RFQ themselves. So, for example, I think we published recently a case study with Venerium. They are a euro stablecoin issuer, and of course, they know the euro dollar exchange rate, right? And so, because that's basically their business, right? And so they market make their own stablecoin on chain. So they sign quotes and they provide quotes, which then Bebop distributes into anywhere across EVM DeFi, right? And so that's something that allows them to have full control of the pricing for their asset. And yeah, and then we also take care of the distribution, which is also obviously a great thing for them.
Is that where you think the space is going, like asset issuers preferring to do this themselves?
Not necessarily. I think it's a great opportunity, and I think for certain cases, you would prefer to do that yourselves. For other cases, you might want to rely on a market maker or multiple market makers. But I would say that it's always best to have multiple solutions and backups, right? Because no one's online 100% of the time. You can run out of inventory or funds on one chain or another chain. So it's definitely good to have different kind of options there. Also, the more makers you have, the better ultimately you create competition, right? And so the better quality of pricing you get. At the same time, when you're starting the market or when the market is of a certain size that's good, but maybe it's not exploding, you definitely want to have control over the pricing, right, yourself. And so this is when you're going to do it yourself.
That makes sense. I think for a stable coin, it's a lot relatively easier, I would assume, rather than like a more volatile type of assets where you might want to introduce more market makers. That might also be a reasoning in this scenario.
I think so. I think so. And also, uh, well, I think these spreads are still pretty wide for, tokenized securities and things like that. So it's probably okay still to do that. Like that would absorb the volatility most likely. And there's not a lot of ARB flow, if at all, that happens on RWAs, at least just yet in DeFi. So basically, you don't get a lot of adverse selection kind of flow, right? So the volatility might be just like variance in kind of what you get per trade.
Yeah. Katya, I do want to move this conversation along. I want to talk about BopAMM, the announcement that
Okay.
you had a couple weeks ago. What caught my eye there was, I'm so used to seeing PropMMs on Solana, and there's so many of them, and it's become so competitive. Whenever we talk about EVM land, the number of people in business there are relatively lesser, and we haven't seen that sort of type of infrastructure built out there. Can you talk a little bit about BopAMM and what the team is doing there?
Sure. What do you mean by there are fewer people in business there?
I think the Solana space in terms of price discovery with PMMs, especially, or maybe that's because what I see on the Sunrise side, like I see a lot more competition there. I historically have not seen that many takers or people interested to do this on EVM per se. But I am totally wrong. I'm guessing by a reaction. So yeah, tell me more about
No.
EVM.
I'm genuinely. I think so. What's interesting with Solana and EVM, I think there's certainly an overlap, but there's also, there's also like a really big kind of a large amount of makers or like players basically that are on the one or the other, which is quite interesting. But I think it's like I think like your heritage and also sort of like understanding relationships and understanding the market structure and is quite important. So it's not just about writing code in a different language, right? Um, no, I mean EVM ecosystem definitely is very rich. There are plenty of players. Actually, just today I was talking to one of the market makers who reached out to us about BopAMM, and they specifically said, hey, there's so much competition on Solana. We looked at it. We decided not to compete because, it probably wasn't worth their while. They determined. And so now they're looking at EVM, right? So that's kind of an interesting move. And maybe what I expect to see is that more market makers will be present in both. And we're going to see like people moving from Solana, expanding into EVM, and sort of vice versa as well. But yeah, so talking about BopAMM, so we launched the closed beta for BopAMM a few weeks ago, as you say. We wanted to see if this kind of method of trading would be possible on Ethereum, which is a very slow chain compared to pretty much any other chain, basically, but also houses the most on-chain capital and generally has a lot of active trading as well as diversity of assets and things like that. So a very important thing when it comes to PropMMs is that market makers, instead of issuing a quote like they do in RFQ that then lives for a certain period of time, they constantly update their prices, right? And so the users always trade at the most up-to-date price. And that means for makers, they don't have to sort of factor in that thing that someone can go and orb them or sort of trade on a stale quote. Now, the question is, oh, cool, in Solana, the block times are very short, right? So you can keep updating this. In the worst case scenario, if your price update doesn't land in this block, but it landed in the previous block, the time difference is not too far, right? You're still trading, people are still trading on a fairly up-to-date price. Now, if you do this on Ethereum, if you don't get the price update into the block, you're trading on a 12-second-old price, and 12-second-old price is really is really far away in the past, right? Spreads top of book for, let's say, ETH/USDC are basically spread to mid would be like 1.5 basis point, like that kind of maybe two tops, right? Whereas price of ETH/USDC within 12 seconds moves quite often way more than that, right? So you basically, like to justify for those moves, your spread must be much wider and just doesn't make any sense. So for us, what was important was to understand this kind of coordination problem. And so what we do, we work with the Ethereum block builders. That's kind of how the process works on Ethereum mainnet, that like the blocks are being built, sort of constructed by block builders and then sent to, they're picked up by validators who then actually produce the block, right? And then it sort of completes. So with that, for us, BopAMM is an infra that connects to market makers, receives their quotes, updates them very, very quickly, communicates them to all the block builders, who then put those updates, who then build those blocks accordingly so that the price update is there in the block and high up in the block, and then the validators pick them up and those blocks and those built blocks, right, and put them on chain. Not all blocks are built by block builders. There are some exceptions to this. There are also some small block builders that might not be on board with kind of this whole program, not because they don't want to, but because they're not yet. So on our end, it's important that we include kind of guarantees for execution for users, right, who wants their transaction to go through regardless. And so we also built in some backups so that your transaction goes through, even if like that chain of events kind of breaks down a little bit.
And is that through like intents in the backup?
No, it's not really intense. It's still all sort of the user can execute the transaction. We actually, talking about intents are kind of becoming sort of like a default way to execute, I suppose. But I don't know if it's necessarily a good thing. Intents are quite limiting. They're not as composable as sort of transaction-based kind of trading is, meaning that you can go and trade, but you can't go and say, hey, like I want to convert this asset into this asset, and then I don't know, put it into some pool, and then like do something there, and then like take it out. And for me, like, and it sounds kind of all quite complex, and you're like, well, most of the time you don't need it, which is true. But also the DeFi is cool because of composability, because all of these things you can have that can kind of happen at once. And maybe users won't be doing this, but like companies are building things that make things better by like combining all these actions together. So this is where actually we support intent-based type trading, but we're doing a lot for the transaction-based one.
That makes sense. And then Katya, like as you've launched BopAMM, are you seeing a lot of the Solana PropMMs also take interest on EVM side, like trying to use this product to be competitive there as well? Do you envision this being like key infrastructure for people to sort of be competitive with both places?
Good question. Well, I mean, I mentioned just this conversation today when someone who has been, well, at least assessing it on Solana is now looking at EVM. I think some market makers, at least my conversations with them about RFQ over the past, maybe months or years, kind of made me think that there are indeed some market makers that are, well, maybe not necessarily married to Solana, but definitely like very deeply embedded in the ecosystem and perhaps feel much more comfortable within there. So I think we'll see more people expanding from Solana into EVM and vice versa, but there could still be certain market makers that have an edge on either Solana or EVM, right? And so which I think is natural, and it's totally cool.
Yeah. In any case, it creates more competitive markets and better pricing for the end user, which is net positive for the entire industry. Katya, this has been awesome. Thank you so much for the time. I do want to leave you with one final question. What's next for Bebop? Where do we go from here?
Oh, so yeah, a few things. We actually are just about to release our new version of RFQ, which is kind of interesting because we also have been working on BopAMM, and I was just telling you about like all the cool things about it. Now, I mentioned the problem of arbitrage and toxic flow and all the kind of stuff that basically deteriorates the markets quite often with RFQ. And BopAMM or PropMMs generally address some of those issues, but at the same time, you need to have really active markets that and that also includes, and basically like PropMM type trading includes quite real fees that you pay to either block builders or just for the chain to update and things like that. So we have also been working on new RFQ that is a bit of a hybrid of PropMM style and RFQ style. And I'm very, very curious to see kind of how it performs against BopAMM, against like PropMMs in general. So ultimately, I'm not particularly married to any particular style of, how you solve a problem, like what is the primitive, what is like the curve, what is the, smart contract. I think it's quite secondary. I think similar problems can be tackled in different ways, and kind of from our perspective, we're trying to tackle them from the two different approaches, right, and see which one is going to win, or which one's going to win in sort of in which place. So yeah, I mean, ultimately our business and our belief is that market maker professional liquidity is something that's going to drive best quality of execution, and that can happen through different primitives that we're working with. And then it's going to happen for whether it's crypto, whether it's RWAs, whether it's spot, or whether it's something else. We're looking at all of those assets and kind of instrument types, and that's what's next.
Awesome. I think the TLDR, if you don't want to go through the entire episode, is this type of infra is what makes crypto markets more competitive and better pricing for the end user, and that's sort of what we all want at the end of the day, for someone to look at the crypto markets versus the traditional markets and be like, hey, this is where I actually want to trade. Infra like Bebop makes that happen. Katia, thank you so much for the time. This has been awesome.
Thank you.